It's corporate earnings season, and a lot of people are puzzled right now. A lot of people are left asking the question, why is investment banks like JP Morgan and Goldman Sachs, the top two investment banks in the world, why are they going up in the middle of a recession? I'm going to talk about some of the key things that they put out in their earnings report that teaches them, well, four key things they put out in earning reports that teaches investors a very crucial lesson. Once again, ladies and gentlemen, boys and girls, and children of all ages, this is Investor Show as always. This is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. So, ladies and gentlemen, today you had Goldman Sachs release their earnings report. You had Goldman Sachs release their earnings reports today that I'm sharing with you guys and girls. And also you had JP Morgan release their earnings reports as well. Now, one of the major things that you've seen what Goldman Sachs said, and also that you will see in JP Morgan report. Let me put up JP Morgan here. Y'all bear with me for the people that are catching this live. Well, not live, but they're catching the video, audio playback. I'm going to pull up JP Morgan's. Where are you at, JP Morgan? There we go. So JP Morgan, they had said some pretty good stuff, not some pretty good stuff, but they showed their quarterly reports, right? And when they show, and inside their quarterly reports, let me pull up a better one. Inside their quarterly reports, essentially what they said was, hey, this year we had 4 reasons we grew so much. So as you guys and girls already know, JP Morgan and Goldman Sachs are the top 2 investment banks of the world. Earnings season has started, and in the middle of earnings season, they started not the middle of earnings season, but the beginning of earnings season, the big banks go first because they give you a good indication of how everybody else is probably going to fold out during the rest of the time, right? So when you look at some of the earnings that came out, like we're looking here now, let's go ahead and look at the press release. This is coming from what I'm showing everybody now. This is coming from JP Morgan's website, Investor Relations, what they put out today. And as you look at the earnings report, they had immaculate. They blew away earnings. Everybody's wondering, how did they blow away earnings? And one of the top reasons why, lessons that we're going to go through today, the first thing is, what did we just have in March? March, we had a massive sell-off. And ladies and gentlemen, when we experience a massive sell-off, what does that mean for investors? That means that a lot of people are selling stocks. When people start to sell stocks and buy stocks, yes, that does mean trading is going on, but it's a good thing when it comes down to certain people. Certain people like your investors, right? When somebody's getting on the phone and calling the investors saying, buy all of these stocks, sell all of these stocks, those are transaction fees that somebody is collecting. So when somebody was selling all those, that massive sell-off that we had in March, investment banks made a lot of money from people selling off. All of that market volatility, even though we live in a very low fee society, somebody is making a massive lot of money when everybody got scared. Everybody started selling. Everybody started buying puts. Everybody started betting against the market. You saw a lot of market activity. They had to hit the circuit breakers, I don't know, twice a day almost, right? The circuit breakers meaning once the stock market dropped so far down, they had to stop everybody from trading. They had to halt trading several times doing this, right? So all those little trades that was going on, Goldman Sachs and the investment banks made money during that time frame. Now here comes the second thing. Now, after we had this massive sell-off, what took place? What took place after we had this massive sell-off? What did the Federal Reserve do? What did the Secretary of Treasury do, Stephen Munch, Jerome Powell? What did those guys do? They came out and they announced stimulus packages. When they announced those stimulus packages, they announced how much money they was going to put into the economy, one way or the other. And when they started to push this money to the economy, of course, you didn't write the Department of Treasury to get the money, the PPP loans or whatever the case may be. This put the financial systems in play. People who really tune into me and watch me notice when I said that, who do I think is going to benefit the most? I said it was going to be the banks, because the federal government, through all these PPP loans and all this other stuff like that, all that lending that went out, And guess what did they put in their financial report? They lended out $28 billion alone in the PPP loans. You can see it right here that I have highlighted in front of your screen right here. $28 billion of loans, a small business administration PayPal protection program, right? So when you do this, when you look at this, this is a precursor. With all those stimulus packages, all that stimulus that went out, guess who was on the end to benefit? Who helped facilitate some of that stimulus? When everybody got into troubles, companies got all these PPP loans, who were right there to benefit? The financial industry, right? The next thing, right after all this big stimulus started to happen, guess what we had? We had the reverse of number two, which was a sell-off. We had a massive rally. Right now, the Dow Jones went down to 18,000. I thought we were going to go to 15,000, but we stopped at 18,000 so far, and we shot up back to almost 27,000. That's a massive amount of money that moved back into the market. You had a massive sell-off followed by a massive buyback, which created more transactions. That's how brokers make money, by people moving money across the wire. Just because you don't pay anything with your Robinhood app or E-Trader app doesn't mean that institutional investors, the people that really move the market, are not paying some type of fee. Pretty sure there is not free, right? So when all that activity went on in the market, who was right there to benefit? You named it. When a massive sell-off, when a massive stimulus, when the massive rally came, who was right there to benefit in the second quarter? And you can see it right here on their earnings report for the third quarter, right? Am I saying that right? December, January, February, March, April, May, June. Yes, third quarter, right? So now what happened, what I just kind of hinted to earlier, also the government gave out part of their stimulus package was a massive loan program. They gave out also, I didn't mean to put into that rally. Out of that $2.3 trillion stimulus package, a lot of it was a bunch of corporate bond buying. You've seen all this corporate bond buying, meaning they was going to stimulate the government, buy all these bonds from corporate bonds from the market. Who's handling all of that money? Who's making transaction fees off of all these programs? Then it turned around, everybody that got a PPP loan probably got it from some type of bank or SBA or some type of bank is facilitating that type of loan, right? So now when you look at all of that money, all of that loan, that you look at what JP Morgan just put out today and Goldman Sachs, well, JP Morgan yesterday and Goldman Sachs today, they have facilitate all of the money that was being borrowed and lended. I think it was JP Morgan that said that money that was lent went up 4%, and they see massive trading. Of course, I didn't even mention their trading. They did massive trades as well. So outside of the massive trades that did very good, we dropped all the way, we went down to 18,000. I mean, we're talking about off of the Dow Jones alone, you're talking about 12,000 point drop and almost a 10,000 point shoot up, right? All in a matter of 2 or 3 months. Look at all that trading, all that massive money. We're talking about hundreds of billions of dollars moved in and out of the market in a matter of months. And guess who was right there to take advantage of all of that? The financial institutions. So now you have JP Morgan just came out with their best earnings ever. Goldman Sachs just had their best earnings ever. Wells Fargo, I didn't really look into them too much. I see they kind of stagnated a little bit. But this is letting you know the financial industry benefited, how they benefited from everybody's fear and greed, and during this pandemic, how they was in line for a profit. Then they set up so much money aside for, they're planning for a bunch of people to default. They're planning for a bunch of people to default on their loans. So their default reserve, they have capital reserves set on the sideline just to but just to take care of people not being able to pay their loans. Right. So, ladies and gentlemen, I wanted you to be able to look at financial reports and to learn how to read them and see and use it as a precursor. So the next time you see something like this happen, you can know who benefits when certain things happen into the economy. Well, let's do a quick recap. Who did I say in the beginning? I said Goldman Sachs and JP Morgan. They're the largest two investment banks in the world. Shouts out to Goldman Sachs. I actually did get a chance to go to the headquarters 4 or 5 years ago. Very nice facility down there on Wall Street. For JP Morgan, now you had a massive sell-off in March, and the second quarter happened. All this activity, everybody was selling. Somebody had to be there to facilitate the sales. Now you had a massive stimulus package that came in and helped boost the economy via loans and loans and buying back stuff and bailing out airlines. They bailed out all these airline companies and issued all these warranties. Who have facilitated all those deals? Then once the stimulus happened, we've seen a massive rally to the upside. Who's there to facilitate the rally? Who have facilitated the loans that was given out to all these small businesses and companies and things like that. I told you guys and girls who I figured that was going to benefit the most from the PPP, as you can see. So ladies and gentlemen, that's a quick recap. My name is Prince Dykes. This is the Investor Show. And until the next video, podcast, cartoon, or whatever else crazy you see me do around the globe. Peace. Be safe. I'm out. And thank you.